Revaluation will be because the government is attempting to get that confidence back. So that means that inflation has really risen very visibly higher, maybe even to, 50 or 100%. And so they'll lop off a whole bunch of zeros. And I can tell you, if they did it today, that it would be north of $40,000. By the time they do it, and I know this sounds outrageous to people because they get blinded by the numbers. If you went back to 1913 when somebody had a $20 1 ounce gold coin and said, one of these days that's going to be trading at $2,600 or $2,700, that person would have seemed outrageous at that time too. So it could be 3 trillion, it could be 100 trillion. I personally have a $10 trillion Zimbabwe note.
Gold revaluation could reach extraordinary levels, potentially $40,000 or more per ounce, as governments may resort to this strategy to restore confidence during periods of high inflation. While such figures might seem extreme, historical comparisons show similar disbelief, like in 1913, when a $20 gold coin's future value of $2,600 or more would have seemed unimaginable. The speaker, Lynette Zang, is a renowned financial strategist and educator with decades of experience in the financial markets. If just 3% of the global population shifted their fiat currencies into physical gold and silver, it could significantly impact the economic system and potentially give the public more influence during the transition to a new currency system. A gold-backed convertible currency would empower individuals to hold governments and central banks accountable by allowing them to exchange fiat money for physical gold, enforcing fiscal responsibility. Lynette Zang highlights that the growing wall of debt across government, corporate, and individual levels is alarming. With rising interest rates, rolling over debt becomes increasingly expensive, leading to a cycle of compounding interest. This debt burden is why central banks, particularly the Fed, aim to lower rates. Treasury bonds, the backbone of the global system, face declining support amid a dollar run reminiscent of the 1960s when foreign governments exchanged dollars for U.S. gold reserves. Nixon's decision to close the gold window handed inflation control to private central banks, resulting in today's near-total erosion of purchasing power. Before we dive into the video, don't forget to subscribe and hit the bell icon for updates.
Can come together on a global basis and just get 3%, a teeny-weeny 3% of the global population to convert their government inflation-based currencies into physical gold and silver. That's everything, right? We might have a shot at having a seat on the table when they're really going into the new currency. And in that case, what I want is I want the public to take their power back. And the way that you do that is by having not just a backed currency, but a currency that is convertible into the gold. So that if you don't like what the central banks or governments are doing, you just convert that fiat money digitally or whatever, however they have it, into physical gold and create restrictions. Because that's what gold and silver do. They force you to be fiscally responsible. Most concerned about is this massive debt wall, both government debt as well as corporate debt, as well as individual debt that is coming due. And if you can't pay it, then you roll it over, and the interest rates, because this is really why the central banks want to lower the interest rates, is because of this massive wall of debt. In the US, the level of new debt that they're having to issue is huge, right? I mean, it doesn't even dip down a little bit in what they're anticipating is going to happen. But that's why Fed Chair Powell wants to drop the rates, but we've been compounding interest forever, right? So that means that we're not paying any of the principal, and the interest that we haven't paid back goes into that principal, and now we're paying interest on interest on interest. So my key concern is particularly with treasury bonds, or 10-year notes really, which is the foundation of the global system. And we don't have anybody supporting that, because there is a run on the dollar that is happening right now, very similar to what we saw in the 1960s when foreign governments were sending in their dollars and pulling the gold out of our system. So much so that it forced President Nixon to, they say, close that gold window, which doesn't sound so bad, but it really forced him to hand over, or what he did, I don't know that it forced him to hand it over, but he gave full control of inflation to these private central banks, which to me is insanity, because that's just about debt and interest, and here we are today with officially virtually no purchasing power left. So that's what has me the most concerned.
Lynette Zang exposes that central banks are skilled at transitioning monetary systems by normalizing new forms of money. For example, in 1913, gold coins, gold-backed certificates, and unbacked Federal Reserve notes circulated simultaneously, easing the public into using fiat money. Similarly, in the 1960s, silver was removed from coins but replaced with plated or base metals that looked the same. These gradual changes eroded public wealth and control without immediate notice. Today, the rise of cryptocurrencies plays a similar role in acclimating people to digital currencies, paving the way for central bank digital currencies, CBDCs. While cryptocurrencies attract attention and participation, their volatility and lack of practical functionality remain challenges. Unlike gold and silver, which require energy and effort to mine, digital assets rely on perception and infrastructure, making the transition to digital money a continuation of the slow process central banks have pursued for decades. Now, let's dive into the interview.
This meaning the central banks know how to make this transition from one monetary regime into the next monetary regime. And that is what is happening right now. And the way that they do that is by keeping things as normal as possible. And the way that they do that is by allowing the new, whatever they're bringing in, so they're letting these cryptocurrencies run because it gets a lot of eyes and people have a fear of missing out, and so there's FOMO, so there's lots of participation, which makes it much easier to transition into a CBDC. But that's how they do it. Like, for example, back in 1913, you had a 1 ounce $20 gold coin. You had a $20 gold certificate, so you could go into the bank with the certificate and pull out the gold if you didn't like what the governments were doing. But you also had a $20 Federal Reserve note that had absolutely no backing and you couldn't convert. And they all were out in the market simultaneously, so people got used to that Federal Reserve note at the same level of purchasing power. So when they took the gold away and they took the gold certificates away, well, the bill still looked the same. And after all, they'd been using it for the past 20 years. So no big deal. And people didn't understand that they just lost their power because they had nothing that could hold politicians or central banks toes to the fire. Then in the early 60s, you had President Johnson that took the silver out of the monetary system in the U.S. So you had all these new coins that looked like the old coins, but they were made of copper and then just plated in the silver, so they still looked the same. And they were in circulation with all of the silver coins at the same time. And incredibly, even President Johnson, a sitting president, to say, look, if you try and hoard this silver, we're gonna crash the market. Incredible that nobody went, wait a minute, what? That's insane. But in his speech, he said they're all going to run at the same time and they all have the same purchasing power value. And so ultimately what happened, how often do you come across a silver coin in circulation anymore? You no. Don't. And it doesn't even have the copper in the middle anymore. It's just garbage base metal that has no value. But when you look at all of the coins next to each other, kind of seems the same. So nobody really realized that we were being robbed, and our work and our wealth in both of those cases were being absolutely confiscated. So today, and I mean, they've been working on getting rid of cash and moving in this direction. This is a slow process. It is not an overnight process until it is, because they don't want you to understand what's happening. But, you know, we got the first credit card in the U.S. without any backing of it in the 50s. So they've really, and in the 20s is when we started with a consumer-driven economy. So they've really been pushing us in this direction. So what do we have now? I mean, what I'm not really seeing yet are cryptocurrencies that have a whole lot of functionality. You know, I think it's fabulous to be able to carry a lot of wealth in your pocket on a little thumb drive, but I kind of need more than that. And the volatility that's in the system, but people aren't looking at that. Like I was talking to somebody earlier. He does hold physical gold and physical silver. That was great. But he's like, oh, and I bought this cryptocurrency and it went up and now I'm a multimillionaire in this cryptocurrency. But what can you convert it into? And a huge difference, too, is that it takes energy to pull gold and silver out of the ground.
The ongoing shift in monetary systems reflects a deliberate and gradual strategy by central banks to transition from tangible assets like gold and silver to fiat and digital currencies. While cryptocurrencies and CBDCs may offer convenience, they lack the intrinsic value and accountability mechanisms of physical gold and silver, raising questions about long-term fiscal responsibility and individual sovereignty in the evolving financial landscape. How can individuals best prepare for a shift to central bank digital currencies while safeguarding financial sovereignty? What lessons can we learn from historical transitions, such as the removal of gold and silver from currency? Share your thoughts in the comments. If you enjoyed the video, don't forget to like and subscribe. Thanks for joining us on this journey.